On this episode of Pennies Going In Raw, we interview Matt Ishbia, CEO of United Wholesale Mortgage, and discuss protecting your profits.
Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Atlas Trading, what the fuck is up?
There are traders, there are prodigies, and then there's legends.
We're up 4%, baby.
No way.
4 fucking percent. Buy the fucking dip.
Hey, who told me about IDEX?
Like, dude, what the fuck? Like, someone just made, like, a lot more money than me on my trade.
You find out life's this game of pennies.
Did you check the portfolio?
Pennies. The margin for error is so small.
I bet Warren Buffett never did that.
And they out there making money right now off of penny stocks.
Them two guys is putting in work to make y'all rich.
The pennies we need are everywhere around us.
Time to think big.
Pennies Going In Raw.
Featuring Dan, Deity at Dips.
And Hugh Honey. Produced by Vinny Strokes, baby.
Welcome back to Pennies Going In Raw. Today is Sunday, January the 17th. And is the SPAC thesis starting to work out? It looked a little bit shaky at the beginning of the week, but as Friday approached, we really saw that drop, and your thesis looks like it may be working out.
Yeah, we'll go into more depth later, but I really think that, we're starting to see exactly what we thought would happen. We didn't touch the 385 that I was looking for, but we definitely, we closed over that 380 on, Tuesday? And that's where I started in on some puts, and they're starting to pay. I think my best put is up 35% right now, so we'll see.
All right, yeah, I was about to ask if you had sold any or scaled out, but you said we're going to touch on that later, so we'll get into that later. But how have you been doing aside from your SPY puts? I know you said a couple of your accounts are in escrow, and you've been kind of complaining about that on Twitter, but how's all that going? How was your week and everything?
My week was okay in comparison. I feel like my hands are tied to a certain extent because even though I can go on margin, I won't. And even though I can cover whatever margin is with the accounts in escrow, I won't do that. So my hands are kind of tied to some extent. But in a sense, it is kind of fun to grow a smaller account again. It's up 20. It was up 20% overnight, which is, I can't usually do that with my normal account. So
it reminds me of starting like a new character on a video game that you already beat.
Yeah, exactly. Yeah, you already know which guns are the best guns when you're going in.
Yeah.
Yeah, exactly. So it is fun. I will say that I do get some enjoyment out of seeing the growth of a smaller account again. But it just frustrates me that I'm still, my hands are kind of tied.
With some things that have been going wild in this market that I guess you've been missing out on, weed stocks and Bitcoin's even been fluctuating, but with weed stocks recently, we saw them just go crazy. I had some calls that I sold for a good bit that were worthless 3 days ago on TLRY, find themselves up 44,000% or something stupid.
Wow.
The next 2 days. I think that runs about over. I think we're about to see that hype die down a little. But what about you?
Yeah, so obviously Biden is going to enter the White House this week, so it's a big week for everything that his administration is going to push for. But I do agree that I think that we'll see a rotational change, and I'm really excited. That's one of the reasons I'm really excited to have one of our guests on in the next coming weeks to really give his expertise on that. But I do think, in my opinion, that because of how inflated the weed market is at this moment, we will see a rotational change. And then what I think is going to happen is when bills start to come back up, with actual federal change, when that starts to come back up, then that's when I think we'll start to see weed run again. So, something I'm going to keep an eye on is a rotational change, maybe the weed stocks to dip. And then on those dips, just start quietly accumulating because we know, Biden's got 4 years minimum. So, we know that he's a huge proponent of cannabis. And so I think that on dips, we could really see, some good potential there.
Yeah, I agree on those. I kind of took my profits on them, but it is definitely fun to see some of those that some people might have thought they were bag holding just go crazy. Like Kern from a few months ago is now even if they just held it, they're seeing huge profits. So that's always good to see with stuff like that. And I'm definitely excited to see where that goes. Another thing that people love to talk about, I touched on a second ago, Bitcoin. It's been fluctuating in that like 35 to 40 range. I expected the pullback to come a little further, but it always bounces. The dips always get accumulated. What are your thoughts on all that? I mean, we did just talk to Doug Bonaparte, and he gave us some advice on how he mined Bitcoin, and we're excited to drop that interview soon. But what are your thoughts on how Bitcoin's moving?
Yeah, first off, the Doug interview was awesome. I learned a lot. But as far as Bitcoin goes, it doesn't hurt to sell half. I mean, no matter what price you bought it at, if you bought it within the last 6 months, you're up massive. So I don't think that it would hurt. We talked about it last week that I do think that Bitcoin has a much larger run in it. But one of the things that we talked about was how heavily manipulated it is. That, that there's like literally 90% of Bitcoin owned by some whales. So, at any moment, like we've seen, they can pull the rug. So I wouldn't be opposed, especially if you have a good chunk of your net worth. Anything really, in my opinion, over 5 to 10% of your net worth in Bitcoin, I don't think it'd be the worst thing in the world to cut half, because we're kind of in a limbo session here to where, at any moment we can break out, or the rug can be pulled and go underneath like 20, 15K.
Yeah, I think the difference is a lot of people that invest in Bitcoin it's one of those set and don't look at. So when they hear like sell half, they don't want to sell half. Like I had to tell my brother to sell his initial investment that he made at 9,000. And then like the next week, whenever it was at 33,000, he's like, "Damn, should I just sell the rest of it?" I was like, "No, just hold it. It's a free. Just let it ride free." Because you never even cared about it until it started going crazy. Now just let it continue doing that,
Yeah, exactly. And I think it was, don't quote me if I'm wrong, but one of the bigger banks, I think it was UBS, that came out. UBS said earlier this week that they believe that, don't quote me again, I'll try and find it, but they believe that Bitcoin can go to zero. And they say that, with regulation, they believe that it's just one big Ponzi scheme, that Bitcoin's going to go to zero, that when the governments start to put regulation on it, that's when, we're just going to see a huge rug pull and the liquidity and the volume just completely fade from it, because they think that retail won't be able to keep up. And there will be too much supply and not enough demand if those whales start to dump their Bitcoin, which is one of the things that, oddly enough, one of the biggest concerns is one of the things that is driving Bitcoin right now is that there's more demand than supply. And UBS is saying that when regulation comes back into Bitcoin, or not comes back into Bitcoin, but comes into Bitcoin, that those whales are going to dump their share, or, their coins, and that we will see way more supply than demand, driving the price down.
Yeah, it'll definitely be fun to watch what happens there. I sadly sold my Bitcoin for about even to pay my taxes last year. But another thing for what happened this week was CCIV. It went crazy. I totally missed that train. Do you want to give your 2 cents on what all happened there? Because I just totally missed it.
Yeah, so CCIV, I noticed the huge volume, I guess around like 10. And I mean, from there on, it was, I don't have a position in it. It was extremely fun to watch because all we saw was just huge fluctuations, halt up, halt down. I think it did, I want to say maybe 9 times the average volume. It was trading hundreds of millions of shares. So that was really fun to watch. But, it'll be really interesting because again, it's funny that we just talked about Bitcoin, because I see CCIV kind of in like the same zone to where, I think they have a rumor about who their partner is, but I mean, that thing's trading pretty high for in my opinion, is trading pretty high. I mean, we'll see what happens with it, but I mean, it's trading at $18 a share, and it got to $21 a share at one point. It looks like some serious action is taking place, and I can't tell personally, because of the range, I can't tell if it's, what it's going to do, if it's going to break up or break down. I think that that'll be based on the next newsline that comes out on it. But it was really fun to watch.
Yeah, and another thing that was super fun to watch was GameStop. GameStop went crazy. One thing that you would expect not to be going too nuts in this day and age where online delivery and everyone just mainly buys their games digitally from, I assume, and the biggest short squeeze ever, what looked like, or not ever, but of the year so far. Which I think is the exact same thing people are expecting to happen with AMC, the movie theaters. Big AMC bulls here. Are you expecting the same thing?
So it's funny because one of the things that I've learned, because through this year I've been working on shorting and the overall thesis of shorting, and we saw a few of them, Nicola, mRNA, something like that, plug a little bit. But one of the people that was most influential inside my overall trading career is my cousin, and he works at a hedge fund. And, maybe we'll get into that in a different episode later. But one of the things that he told me when I was first starting out was don't always do the obvious thing. And that kind of comes into the market with where that kind of came into our SPY thesis. And that also comes into GameStop. I have a friend who GameStop was up 80% and he was buying puts. I looked at the vol on them and they were at again, these are March, April puts, and the vol was trading at 250, 300%. They should be trading at 40%. 50% maybe. So, or anything over 120 and I don't touch. So it's really interesting because, we already knew that shorts were packed in there, and then they got the news. And then not only did shorts not learn their lesson the first time, they all packed in there. And so did, I guess, retail investors. I mean, I was looking on Wall Street Bets for fun, and I was seeing, regular guys with maybe $2,000 on their account, selling calls against GME. So I think that this is a cautionary tale if you're trying to short stuff like that, because obviously the market cap was inflated at that point. Don't do the obvious. Shorts were getting packed in there, and they squeezed them again to another all-time high, or another high. So I think that that's a really good learning curve on both sides. On the one side, which is being, just like AMC, shorts are packed in there. We saw it with Fubo. Shorts are packed in there, and all it takes is one headline to squeeze them. A little bit of buying pressure and a lot of covering. And it can get squeezed. So if AMC comes out with any kind of good news, a rumor, or, let's call it something, that they have enough cash for, 2 more years, or even something as simple as, the pandemic ending and movie theaters opening up in June, we can really squeeze shorts.
Yeah, I'll definitely be going to see several movies and buying lots of Skittles and popcorn and not sneaking any of it in if that happens.
Yeah, we got to do our part.
Yeah, I'm all about doing my part when it comes to helping out a stock. So I'll be there in line at the AMC theater. I actually think they're open near me. So I'm not committing to my word right now. But back to what we were saying earlier, with SPY being a little shaky towards the end of the week, you have a little thesis on it, don't you? And it's starting to pay off. You touched on it last week. You think it's time to short the market. Can you tell us about that, Michael Burry?
Yeah. So we talked about it, and we said going into the Georgia Peaches, that going into that we would see some choppiness in the market. We saw choppiness for 2 days, and then we said that we would see an all-time high. We saw an all-time high. Now we said, okay, let's see what the market does. But so I have a window. I think of it like a window. There was about a window of about 8 weeks where I said somewhere in here, there's going to be a catalyst and there's going to be a pullback. We can go into it deeper level on a different time, but part of it was option flow, part of it is catalyst. We talked about on Benzinga that I've been watching the option flow, I've been watching the algos for a little bit. And then also what we touched on a little bit earlier was that don't do the obvious. If you look around on FinTwit and even the analysts, there are guys out there from JP Morgan that I'm looking, and they're giving price targets for the S&P of 4,000, and then they mark based on valuation technique. What valuation technique are you using that possibly bases the market at a PE ratio of this high? You can't. It's impossible. You can't. So that was one of the first things that I really wanted to look at was that. And then the other thing is that what I always notice, and this is why screen time is so important, is that absolute garbage is running right now. Absolute garbage. And I totally get January poppers. I love January poppers. But we have absolute garbage running right now. Something should not be up 1,000% on a 180-day extension to stay on the New York Stock Exchange. That's incredible. So when everyone's bullish and everything's running and the good times are flowing, that's when I really start to look to the other side. And one of the things that I always learned and has helped me is always trying to see what's in front of me before it punches me in the face. And so that's when this SPY thesis, I've been waiting for this for about 3 months. I wish that I took more at that all-time high, but I was really hoping that we would see 384, 385. So how I'm playing this is, the last part of our thesis is that we're going to see a pullback. Obviously it's starting to work. We're going to see a pullback, and then we're going to pinball to like 400. That's our thesis right now. And right now it's working out well. Like I said, the puts that I have are about up 35%, but I have puts sprinkled across, some expiring at the end of January, and then some expiring, like mid to end February. And that's because, again, I had that 8-week window on the thesis, and I didn't want to be too early. I didn't want to be too late, and I didn't want to, be too far out of the money. So what I really think is going to happen, and Dan, correct me if I'm wrong, but I mean, people really didn't get to hit too hard on Thursday or Friday for the market to take that sharp downtrend early in the morning. The rest of the market really wasn't that affected.
I'll be honest. As someone who's invested in a good bit of SPACs and stuff, and aside from like a couple of the things that I was in, there were a lot of drops, and thankfully AMC actually saved me. But I ended the day up. I don't even remember. It was like not quite my 1%, but at one point I was down about 1.5%. It just around that 9 o'clock in the morning. And if I didn't have AMC and all those calls, I would have been red. So I think it may affected people a little more than you're giving it credit for.
Oh, okay. Maybe it's just because I have so many puts. That, I like I said, my account was up like 20% overnight. So, that was thanks to the puts. Okay, so then maybe that's me. Maybe that's me just being, a bear. I was actually kind of shocked because I had some DMs when I was, I wasn't, maybe I was gloating a little bit when SPY started to really shake and bake there. But I had some DMs, asking like, what should I do? Should I buy puts? And guys, I really, we talk about it, but it's so important to take notes why we're doing this. I really try and not hold too many hands because I believe that when the music stops, you're just going to be flat on your face. So that's why I try and lay out my thesis, but I try not to hold your hand as much as, maybe like a paid alert room or something. And that's because, I want you to succeed, but I want you to kind of do it on your own. And so SPY, I don't think we bounce from here. Something that is really important is that we have held the 20-day moving average for quite some time. When I'm looking at the chart right now, and we've held it for a while. But if we break that, we could be in trouble. And right now that's sitting at about 374, let's call it. I can't see it too good because I have a towel over my head. But but if we break that, we haven't really broken that in quarters. So if we break that, and this is part of the other thing that we were talking about, the thesis, is the reason I took options against the market is because as we see the market, kind of like when we saw around election time, when we see the market take, 2-3% off the table in a matter of days, the volume on them just flies. It helps us a lot better when the move happens quicker. So even though it's only 1%, I mean, my calls went 35. I mean, excuse me.
Yeah, whenever it dipped down to I think 375. Me and Tommy, we got calls for like 376 and 377. We got out with 100% and like 70% gains. And yeah, it was just funny because I'm like, I know Hugh's banking, but we just banked too off the opposite thing.
Yeah, that's so funny because he sent me Tommy, Breathe Carolina, sent me a screenshot of your, I think you guys were up like 110% at one point, and he said, cover your puts, I'm coming, or something like that. No, but so I think it's really funny. And one thing, I'm glad that you do mention that, because if we see a significant gap down on Tuesday, I'm going to start doing something called, I'm going to start like trying to be a more well-rounded trader. And that means that not only seeing the long side, but also seeing, not only seeing the short side, but seeing the long side. It's kind of like if we do see a massive gap down, let's call it 2%. When we start to bounce, take those calls, for a quick scalp and then add back those puts, so really trading around the core of the position and, being lean and mean. That's definitely something that I want to work on.
Scalping calls and puts is like scalping regular stocks on crack.
Yeah,
I think
exactly.
Crack may be an understatement. It may be like PCP. It is insane.
Yeah, exactly. Well, that's what I mean is that keeping the puts that are dated, keeping them for the bigger picture, kind of like what we saw like literally to a T Friday when we saw that sharp sell off, and then we saw the move back. If you took calls like Dan said, you'd be up 100%, maybe even more depending what you were which ones you took, and then repositioning on the puts. So that's how I'm gonna try and play, especially earlier in the week, because I do think that we are setting ourselves up here for a move to, Brady posted it today. I think we do break of the 20-day moving average, then 372. And then from there, I mean, it could get ugly. And we see, my price target is like around 360. I know I was floating around 350, but I think that if we just see one quick correction or, one quick sell off to 360, I think that'll be the perfect, kind of like what we saw around the election. I think that'll be the perfect basing that we need to clear 400 on SPY. So that's kind of how I'm playing it. Like I said, is that I don't want to, but that means that, when we do see 365.
So you haven't sold any of them, have you?
Oh, no. The only ones I sold were the ones that were expiring, the 200% that expired on Friday. I actually added to my core position because, I was really hoping that we were going to see that 385, but we didn't. So that last bullet that I had, I added it to more calls. I really, you guys know, when I feel thesis.
You mean puts?
Shoot, yeah, puts. That's what I mean. My bad. You guys know that when I feel good about a thesis, and especially something like this, I love being on the other side of everybody. I love it. So SPY, I'm going to try and be a better, well-rounded trader. And, if we see that sell-off Tuesday, which is what I'm kind of planning for, to kind of trade around the core of my position. And I still think that we see a fade Wednesday and Thursday. But that doesn't mean, the 20 moving average has held for the most part. So if that holds, we could bounce back hard. So that's something to keep in mind as well. And then when we do start to round it back, that's when I'm going to buy calls, and I want to do the same thing because I think we bounce hard. So, but I'm not going to start into that until we see confirmation. But so far, our thesis is working out pretty well.
All right. So if we're expecting that 5% drop, if you're a bull like the most of us, and you are right, and SPY is going to drop. Before we have the Matt Ishbia interview, I think we should talk about how to protect your profits, assuming you're not loaded on SPY puts.
Yeah. So one of the biggest things that we talk about a lot in Atlas is when you're not doing it or when you're not feeling it or you're, or you feel a little uneasy, play smaller. If your starter is usually $500, bring it down to 200, 250. If have some cash on the side. That's one of the biggest things that I can say that really helped my trading career is playing smaller when I felt uneasy and not trying to force it.
Yeah, I kind of like this, but we can kind of just go through like 5 ways to kind of protect your capital and kind of touch on each of them. But yeah, I agree that playing smaller is definitely one of the better ways. Having cash on hand, and keep in mind, if you're playing smaller, that means you're having some cash on the side, which means if we're expecting a dip, it's going to give you cash to load those dips. So it's a win-win. You're losing less if the market's dropping, and you have more money to add when it's down. I think the next one is just playing with better risk management, whether that means selling for profit sooner or having a strict stop loss. Adapting to the market, taking what it gives you.
Yeah, definitely. We talk about having a plan. It's so important to have that plan and follow that plan. If you say that you're going to cut something at, X, Y, and Z, do it. Don't hesitate. Do it. Look at the dip as a buying opportunity. Don't look at it as oh no, the SPY's dropping. Look at it as a buying opportunity. And then, the next thing that we talk about here and there is taking the money that you owe out. We've been pounding the table about taking the money for your taxes. And if you didn't heed that and you didn't pay your estimated tax and you still have this, big tax bill, take that money that you owe out, put it inside a market account and let it just sit there so that at the very minimum, if you lose everything, at least you don't owe. Because losing everything sucks. Losing everything and owing, the worst.
Woo.
Yeah.
It's called debt, baby. And with that being said, if you work full time and this is kind of just like a side gig, but you feel like you did put a decent amount of money in it, maybe take out your initial investment as well. Now you're just playing with house money. I think that's not a bad idea, too.
Yeah, definitely. And then finally, are we going to talk about hedging?
I think we got to talk about hedging.
Yeah. So one thing that's really key, and we talk a lot about compounding gains and that, when you're right, press the metal to the pedal and all this stuff. But something that's really important is hedging.
Press the metal to the pedal?
Yeah. Is that not the right term? You know what I'm trying to say? What is it?
Other way. Nah, pedal. You got to pedal to the metal because that means I think your car would be broken or you're under your car if you're doing metal to the pedal. Unless you have like a metal leg. If you had like a prosthetic leg, I guess that could make sense. Metal to the pedal, baby.
Okay. So pedal to the metal. All right, my apologies.
Yes, sir.
Okay. All right, yeah. So we talk a lot about that, but when things start to get uneasy, it's important to put on hedges. So we talked about that originally these SPY puts became a hedge, and as the thesis started to work out correctly, they became a full-blown position. And now my portfolio is definitely on the side, especially with the amount of cash I'm playing with, is definitely on the side of a bear on the overall market. So what am I doing to, just in case that SPY decides to rip? Yes, of course, I can just sell my puts and sell my VIX calls. But how I'm really hedging myself is that I also am using SPACs as a hedge because SPACs are heavily correlated with the market. So as we see the market go down, the SPACs are going with it. So consequently, if the market goes up, so will the SPACs. So another hedge, especially if you're a bear and you took our call, about buying puts and buying VIX calls, another hedge is to, if you really wanted to, another hedge would be to sell, to buy puts on the VIX because the VIX is the volatility indicator. So when the market's doing well, the VIX goes lower. When the market does not so well and the market's going red, the VIX moves up. So what you could do is that you could take puts on the VIX. Consequently, a lot of people take VIX calls to hedge their portfolio. So if you are and this is what a lot of hedge funds do, is that if you are a mostly long account and you do no shorting and you have 70% of your money inside the market and you have 30% in dry powder, and you're worried about a dip coming, but you don't want to lose your potential on your companies. Well, if you buy some dated VIX calls, then you're hedging yourself in case the market goes down. Because when the market goes down, those VIX calls are going to be good. So now you can roll that profit into your other positions and you're still making some kind of money. Zach touched on it, that on days that he does half of his account in swings, half of his account in day trades. And that's a good idea, but because when his swings are down, he's making money by day trading. And when, maybe the overall market, when the swings are hot, he's doing less day trades. So he's always kind of bringing in some kind of capital and some kind of cash. And that's what hedging, that's the real benefit of hedging. Now, you don't have to go point for point. If let's say that you have $1,000, for every $1,000 that you have on the long side, take $200 for the short side. Or so if you have a $10,000 account, take, $1,000, $2,000 in VIX calls. So that, and then you can always move out of the hedge and things of that nature. So I think that that's really important, especially if our thesis is working out.
Yeah, and I think another way to hedge yourself is just not even for just like for the overall market, but if penny stocks are, not the best that day, play some large caps.
Yeah.
That we mentioned a lot, be able to adapt to the market and play different things. You need to have strengths of a lot of different areas to really be able to bang in a lot of different markets.
Exactly, for sure.
All right, so one last thing before we get into the interview is a little scenario we got sent. Remember, we are not financial advisors or tax professionals, but Hugh, are you ready for this one?
I'm ready.
All right. Hey guys, I started in October, made over $40,000 from my initial investment of $2,500, mainly from options. This year has not been as great. Long story short, I bought calls on things I should have bought puts on and bought puts on things I should have bought calls on. My $40K is now down to $7,000 since just January 1st. Although this just sucks in general, am I screwed for taxes?
Okay. Wow. You really dug yourself a little bit of a pickle here, huh? So...
Yeah.
Did they mention if they have another job or is this their sole income? Are they a student or that's all that's all the details that we got?
This is all about the details, but judging by their profile, they do have another job.
Okay. So at least they're bringing in some kind of income. So I'll answer this inside a two-part and jump in if you agree or disagree. I think one of the biggest issues is that when people start to lose money, when we go on a really hot streak and then we start to turn and we start to go on a little bit of a cold streak, and this happens to me, and this is what used to blow me up. I used to do 1,500% inside the first 7 months of the year, and then 2 months would give it all back. And that's because of two simple concepts. And for newer traders, this is going to be like, I think I'm going to blow some minds here. Okay. When you start to lose money, to get that money back, you go in heavier. And then when you lose again, you try and go back heavier. And you keep saying to yourself, okay, if I hit this one, then this is all I need. Okay. And then now you start to not have the capital. So then what do? Especially if you're an options trader like him, is that if you don't have the capital, what you do is that you say, okay, I'll take a riskier option with less capital. And then that option just expires worthless. It sounds like that's your issue. You just started on a slippery slope. And you just, you're at the bottom of the, you're getting towards the bottom of the hill. But the good thing is that $7,000 is a lot of money. That's a lot of money. You can still work with that.
Yeah, they're still up almost 300% from their initial investment.
Yeah, exactly. So that's still impressive, and you can still do great things with this. So one of the biggest things is going to be what happened. You have to understand where did I go wrong? Was I taking too big of a risk? Was I maybe deviating from what worked before? So you really have to sit down and look at your trades and understand where you went wrong. That's really helpful for me. And it's not even that maybe you went wrong. Maybe you didn't adapt to the market conditions that were given to you. During August, we see a much slower penny market. So you have to adapt to large caps. And so it might not even be you. It might just be that you didn't adapt to the changing market. So then the next thing that you need to do is that you need to bump it down and you need your starters to be smaller. Right now, your confidence is probably decimated and you are just trying to make it back to that level. What you need to do is that you need to hit the refresh button and say, okay, this is what I'm starting with. My starter on a position is going to be $100. My one dip add on support is going to be an additional $100, something like that. And then once you start to see consistency, that is when you start to scale up. But you're not going to start to scale up to like $2,000, $3,000. You're going to scale up to $500. This is definitely going to be a long game.
What do you think they should do about the whole? If it's 30%. They're still looking around $12,000 in taxes, paying it from the other job or maybe some of it from this account.
Yeah, so that's a really good question. So it really depends, what state you live in because of state taxes and stuff like that, and what your other job is. And one thing that I want to touch on is that maybe, you take some money out and you start back at, let's call it $2,000. And then you take out that other $5,000 and you just put it into a savings account because you still are going to owe taxes. And this is why we pounded the table earlier about paying your taxes, because you don't want to owe. You don't want to owe. So that's why it's so important that, especially if you're newer and you had a crazy year, to pay your taxes because of this exact situation. But that's inside our hindsight. So what I would suggest doing is that I would take out the $5,000 depending on your financial situation. If you can cover your tax bill, fantastic. If not, you can go on a IRS payment plan. And that would be that basically every month you would pay a certain amount, something like that. But as far as trading goes, you got to stop risk. You got to stop the bleeding, and you got to stop the risk that you're taking on. And I would even take that $5,000 and put it towards your tax bill. And depending your financial situation, just pay your tax bill off. And then of course, depending how you end the year, you can just keep writing off these, this loss for a good amount of time. You got anything to add?
No, I was just going to agree with you on taking out the money, the $4,500, and keeping it at, just making sure you can pay off this, if not file an extension. So I agree with you on all of those things. I think this guy should get out of the situation. Maybe he had beginner's luck on his first options.
Yeah.
Take it from options, maybe go to equities. But with that being said, we're about 40 minutes into this, and I think it may be time to give the people what they want.
Heck yeah.
The CEO of United Wholesale Mortgage, NCAA champion, Matt Ishbia. Okay, so today we have on Matt Ishbia, President and CEO of United Wholesale Mortgage, which under his leadership has gone from 12 to over 8,000 people and has become the nation's #1 wholesale lender. Also an NCAA basketball champion at Michigan State and luxurious gift giver. How was that? Was that good? Okay, so you've been president for around 7 years now, correct?
Yeah, since 2013. So, yep, 7-8 years.
Can you kind of touch on the company's main visions, values, and just overall mission?
Yeah, we're a mortgage company, so, we deliver faster, easier, cheaper mortgages than our competitors. How do we do that? I do it with great people. I mean, mortgages are boring. You guys only want to hear about mortgages. I could talk mortgages all day because it's fun for me, but it's, the reality is what we do here is I got 8,000 awesome people. We're about people. We're about a culture and a great opportunity for people to grow and do great things. And we compete. We're very competitive. We'll talk a little bit about some of the things we do, but we're a mortgage company that tries to deliver great service to mortgage brokers. So we don't have to have our big commercial. We're the #2 overall mortgage company in the country, #1 wholesale lender, but we don't have commercials and all that. So we work with independent mortgage brokers, whether they're in Alabama, Minnesota, New Jersey. We work with all of them, and we are their partners to actually lend money to consumers. And so I love what I do. I love what we do here. And at the same time, I got a great team of people around me. So it makes it a lot of fun.
Yeah, what I've been super impressed about is your growth. I was watching interviews from just like this past year, and every 2 months of the difference in the interview, the amount of people would go up by about 1,000. It was 4,000, 5,000. I'm like, which of these is right? And then I saw something that came out today that said 8,000. So I said, I'm going to stick with that one.
Yeah, we've been growing a lot. It's hard to grow that much, especially during a pandemic. However, so 65, 66% of all the people that come work here are referred by someone else that works here because it's a great culture. The one I wish, if you ever guys are in Michigan, you guys come out and check it out. It's such a fun place to call. You just can't do it because I only got 20% capacity right now relative. We used to have 8,000 people. Now I got 2,000 people here. It's just a little different, but it's we're growing a lot. Last Monday, last week we just hired 530 people started at our company. So literally. Joining our team because we have a huge opportunity to grow. And so it's just operational capacity along with technology investments. Those are the two things that will catapult our growth. And so we're going all in and planning on growing a lot this year.
Yeah. And most of our listeners are kind of interested in how you're going public through a SPAC. Can you touch on why you're going public through that route, although you don't really need the capital infusion? And you just kind of touched on the culture of the company. Will that affect it at all? And I know are you giving them all $1,000 in the new stock once it goes public?
Everyone's getting a minimum of 1,000. Most people are getting a lot more. I like the thing the 500 people that started, last week, on Monday, are all getting $1,000 in shares. We're real big on it's a family company. So even when the company officially is public, I'm going to still control 94% of the shares in the company. And so some people can say that's a bad thing. Some people can say it's actually a great thing because me and the leadership team, we're the same people that have got us to where we're at. And there's a saying, what got you here won't get you there. But I don't believe that. I think what got us here, we're going to stay in the weeds of the business. I'm going to stay here. I get in the office at 4 a.m. I stay till 6:37. I'm grinding every day. We're going to become the number one overall lender. On our goals is not to be the number 2 overall lender. I don't like saying that, but at the same time, that's where we are today. But the plan is to continue to grow. And the SPAC concept was basically, we're competing with, we're right now Rocket's number 1, we're number 2. Then right behind us is Wells Fargo, then Chase and Bank of America. I mean, these are the companies that I'm competing with. And it's just been me and a family company. And we don't have any private equity backing. We're just trying. And so we got a chance. I met Alec Gores, who's a great guy. He's done a bunch of awesome SPACs. He's like I consider him the godfather of SPACs. He looks at a lot of deals. He knows it inside and out, and got a chance to spend time with him and realize that, gosh, what would level the playing field for UWM? Access to capital at a whole other level, access to resources at a whole other level. And that's what we're doing now. So I don't have to make a decision. Do I invest in technology or something else? And I always chose technology. Now I can invest in technology and servicing and other things to continue to catapult the business. And it's not, although we're getting a lot of money and we're making a lot of money. We had a huge year in 2020. My expectation is to do more volume, more mortgages in 2021 and make it not even close. But with that being said, I'm not cashing out, so back to the 94%, I'm all in. When the stock goes up, I win with you guys. When we do we're paying a dividend. We're going to pay a really nice dividend, and maybe we'll even expand that in the future. But I'm part of the dividend too. I'm an owner like you guys, and so we're all on the same team. We're going to win, and win long term is the play.
Right.
Yeah. So kind of touching on, obviously your growth this year has been incredible. You guys are growing at a huge rate. Do you feel, how much of that do you feel is because of low interest rates? I mean, we're seeing interest rates that are, we're basically giving away money as a country right now. You can borrow money for, cents on the dollar. How much has that affect, how much does that affect your growth? And do you see this growth continuing even with an increase in interest rates?
Yeah, no, it's a great question. So anyone that has a mortgage guy or gal these days can make money in an environment like this, right? But the way I think about it is we've been in a steady path of growth the way we've done for the last 6-7 years. When I got here in 2003, I was the 12th person, and now we have 8,000 people. But even in 2012, 13, when I became the CEO, we had like 1,000 people. It was not the same level. We were doing $13, $14 billion of mortgage year. And our expectation in 2021 is to do well north of 200 billion. And so it's grown a lot now. So what I would say to that is, yes, obviously we're doing better when rates are lower than if rates were higher. However, 2016 was Brexit. If you remember, rates were low and then they went up 17 and 18. You want to see a good mortgage company, look and see who made money in 2017 and 18. from 2016 to 18, our compound annual growth rate was 28%. So we grew. Place like Rocket went down 14% because Rocket's like 95% refinance. So those guys, and so I always tell people about our mortgage businesses, we don't look as good in the good times. So we're looking good right now, but we don't look as good. We're less cyclical. We don't look as bad in the bad times. So we actually win when rates go up. So I'm actually excited. We're going to win right now. We're going to take advantage of it, make a lot of money, be very successful. Well, when rates tick up in 2023, 2024, whenever that happens, that's when we'll become the number one overall lender, because the people that are doing all the refinances, like we're doing refinances, but that's not my only game. Yeah. But we're a purchase business. And so I think it's definitely that's like the next inflection point of growth. And when everyone else is going to struggle, we're going to win.
Yeah, and I think a really good point that, as we're going through this interview, I think I love, as an investor, I think one of my favorite things when I look at this is, one, how much ownership you have, and two, your competitive edge. Dan and I were talking about it. We watched some of your other interviews, and I think one thing that we love is your competitive edge.
Yeah, well, thank you. Yeah, I'm competitive. It looks like you guys are doing great things. I'm trying to hustle and make things happen, and I'm very competitive. I'm 41, and so I'm older than you guys, but at the same time, I've got a long run in front of me to build this thing up. And like I said, although being number 2 out of whatever 30,000 mortgage companies in America is pretty cool, it's not where we want to be. And we're going to continue to grow. And I got a great team of people around me. They make me look great, and they work hard, and they do great things. We're a great team together.
Yeah, it's one other thing that was kind of, as you're speaking towards the future, one of your first, towards your earlier days of working there was 2008. What was that whole situation like? Even though you weren't the CEO, I mean, I'm sure it was still crazy.
Yeah, what was interesting? And so the company was originally started by my father. My father is an attorney. He's never actually worked here. He had like 8 businesses. He had a small little mortgage company. I came and started working there. And, kind of started building it. And I became an EVP. Honestly, there's 12 people. It doesn't really matter. My first job was taking faxes off the fax machine. I made $18,000 a year. That's what my father paid me for the first year. And like I said, it kind of evolved. But the 08, so one of the things I always give my father credit. I love my father. He's a great man. He's 72 years old, and he's just a great guy. I talk to him almost every morning. He drives to his law firm at 6 a.m. and calls me. I'm already at the office, and we chat for a minute or two. But what I give him credit for is, back then, we didn't do subprime mortgages. I was new to the business. I said, hey, Dad, why don't we do this loan or this loan? And he said, listen, Matt, one thing we're going to do, we're not running a mortgage company. Don't ever run the mortgage company just to make money. Do right by people. Think about the long term. And just because we're going to make a commission by lending someone money, if we're not going to lend someone $150,000 when their house is worth $125,000. We're just not going to do it. Right. And so the 08 time frame where everyone else struggled, it was actually one time where it was someone who likened it to, probably you don't even know this movie, like Forrest Gump. It's an older movie, but like there's a thing called Bubba Gump Shrimp, like where they're the only shrimp boat left out there. Like we were doing things the right way, the right loans. And so when all that stuff crashed in 08, that was actually our time to shine. And that's really an inflection point of when we started to grow, because we were doing the conventional and FHA loans, and we were struggling in those boom years because we didn't want to focus on the wrong type of loans.
Right. Yeah. I think that's something super impressive about you is how you always, I just saw another interview with you about how you were saying how to make COVID, like this whole period, turn into a productive and good time for you. And I think that may have reflected like the whole 2008 thing.
Absolutely.
Okay. So going into some questions, from looking at things at the UWM headquarters, like the Breslin Center conference room in your office, it's obvious that Michigan State basketball has played a large part in your life and in turn, how you lead your company. How's your time playing and coaching with the legendary Tom Izzo prepare you for the corporate world? And what is more competitive, the Big Ten or the mortgage lending industry?
Yeah, so I got a chance to play for Tom Izzo. I was a walk-on, so I made the team as a preferred walk-on. Eventually earned a scholarship. I played 4 years, but I wasn't any good. To be clear, I was the 14th player. I had to be the hardest working guy to be the worst player on that team. But my first 3 years were 3 Big Ten championships, 3 Final Fours, and we won a national championship in 2000. And so it was a pretty cool experience to be part of that. Learning from Izzo as a player, and then I coached with him for my 5th year to learn was just, I give that, between him and my parents, I give that all the credit for where I'm at right now. I learned, my dad is a giving, humble, friendly person, take care of people, do right. And Izzo's a driving force, competitive, outwork everybody. Yeah. And so I try to combine the best of both those things. And that's what it is. So what's more competitive, the mortgage or big dot? I don't know. Mortgage is very competitive. Big Ten is there's less teams, but man, it's a zero-sum game. Only one team can win a championship in the Big Ten.
I'll give you one thing. You were 41-4 in the games you played in. So I mean, that's an impressive stat. And I actually found a 1998 newspaper that really hit and really compared you to Pip from the Charles Dickens novel Great Expectations. And they were talking about your senior year, but that was what they hit on the whole time was making it a pun on Great Expectations. The book.
Yeah. It was a great time back then playing, and like I said, I wasn't that good. I worked hard to be on that team, and but it was a cool experience, and I learned so much. It was a lot of fun. I don't know if you follow basketball closely, but Izzo was a great coach.
Oh yeah, I'm a big Auburn guy. I'm sure you saw our recent run to the Final Four. So
I was actually there because Michigan State was in the Final Four too.
Yeah. We both got. We should have been there together. We should have been in the final together, but they didn't call the double dribble. I've never seen Kyle Guy with the 3 in a row. Man, that was tough.
Unbelievable. I was there. I'm on your side of that one. I was shocked.
Yeah, insane. But so y'all just became the exclusive sponsor though on the helmets of the Detroit Red Wings. How did this partnership? How did that kind of develop, and how do you think that'll help grow your business?
Just local here. Here it's about getting great people to want to join. The more our brand is out there, we never really focused on getting our brand out there because we're behind the mortgage brokers. We're the silent brand. We power the mortgage brokers. The 40,000 loan officers, 50,000 loan officers throughout America. We make them successful, whether they're in Alabama, Minnesota, South Dakota, LA. And so we don't need our name out in front. We want them to look good. But now but locally, we do want our name out in front because we're recruiting talent. Like I said, we get 300 people apply to work at our company every day, which is 6,000 a month. And we pick the best 3, 4, 5, 6, 700 to join. And so we want our name out there. So the Red Wings, they're obviously a great brand and they're well known locally. And the opportunity to be one of the first people to be on a helmet in the NHL was pretty cool. And we're looking at all different types of sponsorships to continue to raise our profile while focusing on the mortgage brokers. Findamortgagebroker.com, helping them grow, helping them be successful. Because if they grow, we grow.
Yeah, what's your connection with them? I've noticed you talk about them all the time. Like you want people to use findamortgagebroker.com. Are you just promoting them because you're one of the best and they're going to revert to you, or can you kind of touch on that?
Well, I'm promoting them because the biggest disparity in the littlest known fact is that the cheapest and best way to get a mortgage is through a mortgage broker. Whether they come to me or they go to my competitor, Rocket, they go to whoever, you will always get a lower rate and a better deal by going to a mortgage broker. It's black and white. It's crazy. But the thing is, you wouldn't know that because all the people that spend all the money, like if I'm going to spend a bunch of money advertising, if I'm Rocket Mortgage, they spend a bunch of money advertising, so you come to them, not so you go to a broker that might come to them. I'm the reverse. I wanted to go to the brokers and it might come to me, but if it doesn't come to me, it's okay because you know what? Every consumer that goes to a mortgage broker gets a cheaper, faster, easier mortgage. It's not my opinion. It's fact. I can show you data after data. I mean, literally, if you go to Rocket Mortgage directly and they'll offer you, 3% with $5,000 in fees, you go to a broker that takes you to Rocket Mortgage. Even after the broker's paid their fee, your rate is 2.75 with $3,000 in fees. The wholesale channel is always cheaper. And so what we built our whole business on is giving the technology to the mortgage broker so that we can close loans fast, giving them the service they can be successful. They already had the lowest rates. And so therefore we capitalize on that. And that's our business. And that as that broker channel, so the mortgage broker market is the only place. So remember, we're the number 2 overall lender, but I only play in 20% of the market, which is the mortgage brokers. The Rocket plays in 100% of the market. Well, the mortgage brokers used to be 56% of the market pre-crisis. Went down to 14 and now it's on its way up. And when it grows to 25 to 30 to 33% over the next 5-6 years, we're going to grow a lot. And that's the play going forward is help them grow and we got a chance.
Yeah. And I think,
definitely.
I think one of the biggest things, Hugh, were you about to touch on the speed of how they do it?
Yeah, Matt, you just touched on, how quickly you guys really close. UWM closes most loans in about 15 days. The industry average is anywhere from 45 to about 60. How are you able to do this and be effective? You touched on that you guys, that Rocket does, subprime, primarily, and that you don't primarily do subprime. How can you be thorough in making sure that me, a college kid, isn't taking out a loan that I can't that I can't pay back, while yet still getting that loan done in a third of the time?
Right. No, so good question. Just to clarify, Rocket, I don't think no one does subprime anymore. So Rocket's not doing subprime. Yeah. We're all doing the same loans. We're all doing loans sold to Fannie Mae, Freddie Mac, Ginnie Mae. And so the FHA, VA, conventional loans. And so first off, how do we do it so much faster? It's strictly technology. We have over 1,000 technology team members building technology to make the process faster and easier all day. Now, Rocket, and who does a good job of marketing themselves, they market themselves as a technology company, and they are, to be giving them credit. But how do you know if someone's great technology is really working? Well, let's look at the results. The results, they're faster. The industry is 45 to 60 days, and Rocket's like 29, 30 days, which is great. We're 15 to 17 days, submission to closing loan, application to closing, which is, and you say, well, why does that matter? Well, time kills deals. The shorter amount of time means the cheaper rate you can offer the consumer. The other thing I would add to that is nobody wants a mortgage. Like, the reason people don't get mortgages is because it's a pain in the butt. Nobody wants it. And so if you can make it fast, easy, and cheap, well, they'll do it. And that's what we've been focusing on. And so, Rocket Mortgage has done a good job, but what we focus on is our technology. And then, of course, I'm a very big, people think I like to say I'm younger, but not as young as you guys. I'm a younger CEO and I talk fast. He must be a sales guy. I'm actually an operations guy. I'm very, very big on process. And so our technology and our process is everything. And so we're very focused on every aspect of the mortgage process, making it so it's so simple. So the consumer can e-sign the docs, and then they don't have to go look up their bank statements and fax over stuff. It's all electronic. We can go get the stuff for you. We make it so that you don't have to really do anything besides sign the mortgage, go through the process, qualify, back to your point about qualifying. And if you look at the top mortgage lenders, there's the top 25 mortgage lenders in the country. We're always number one or number two of the highest quality, which means best credit score loans. We don't do the lower credit score loans because we're focused on fast, easy, cheap for the best borrowers, the fastest loans. And that's why we've been growing with the best quality. And even when the pandemic hit and rates went down, but the delinquencies went through the roof. We had lower delinquencies than almost anyone in the country, lower forbearances than almost anyone in the country. And that's because of the quality of the loans.
Okay, so another big thing you're doing right now, and it just seems crazy. You're turning a massive soccer arena into a place to train employees. How did that come to be, and what can that provide for your company?
Yeah, so it's a good question. So we have 1.5 million square feet here, and I'm really big on culture. Once again, if you guys are up in Michigan, I'd love to give you a tour. But I bought a 600,000 square foot building, and we grew so fast that I bought the 900,000 square foot building across the road, and then I built the longest bridge in America connecting them. So it's 26 feet wide, 1,000 feet long. You got to walk. We got moving walkways in there like an airport. And so we connected the buildings. Well, we're growing so fast that we might run out of space again. And so what I did is there's a soccer arena, about 400,000 square feet, about just on the other side of our property where we actually can connect our properties. And so we bought that partially to be a backstop in case we grow so much that we have a place, but also it's in the community. And so we're in an area in Metro Detroit, where in the area there's we're just north of Detroit. We're in nice suburbs. Pontiac is a tougher area, which is right where our office is, Bloomfield Hills and Pontiac. Bloomfield Hills is the nicest suburb. Pontiac's one of the tougher suburbs. And we're right on the border of those. And so what we did is I bought that, and actually the company didn't buy it. I personally bought it. I bought it. I'm going to rent part of it to the company as a space needed, but I'm actually going to turn the rest into a community center to help the kids, make it a free community center for kids locally, help make an impact on them. So it's soccer right now, but I'm going to put some basketball courts, some volleyball courts in there, bus the kids from the city so they have a place to go after school, really do some right things. And so it's a kind of a defensive play for the business, but really it's a community play. Let's do good by the community, make an impact. And that's something I'm really passionate about is my mother was a teacher in this community for 25 years. And how can I help the kids? And so that's why I bought the soccer arena. Not really, I know they said for building space, but that's kind of a fallback, excuse me. It's really for the community, for the kids.
That's great.
Wow, that's awesome. Yeah, and just touching on, so, I mean, you said that right now you guys have about 2,000 employees because you're at 20% capacity, and that you guys are growing, you bought now the 3 properties, it would be significantly less money for you guys to work at home. And could you touch on, kind of why you want everyone to be inside a building and not working from home, like kind of how, big tech is moving towards?
Yeah, so it's a great question. So two big answers to that. First, the culture, the family, the team. You can't feel the difference if everyone's remote, they're becoming independent contractors. When you're remote, so here's what it works. When you work at UWM, you'll look at our cost of you guys are good investors. You guys understand it. The cost to originate a loan is a key component. So why you can win in a high rate market and a low rate market. Everyone can win in a low rate market. Everyone's making a lot of money, but you got to win in all markets. And that's why we've made money every single year and always been consistently successful and profitable and growing. And so we have the cost to originate. Well, one of the things is if you have people all over the country or you have people working from home, they're not part of the team. They're just independent contractors, basically. They work from home, they're remote. And I know everyone says, oh, well, that's where the world's going. It's not where our world's going. At UWM, I don't believe in it. I believe that when we get everyone back, we are a better team. And so the cost is, people love working here. People don't resign and leave here. We had more resignations because people were saying, gosh, I used to go to have drinks with my teammates on my team or a pod, or we have a company fair, we have a holiday party, we have all these cool things. And when you're not doing those things, it's less exciting, less part of the team. So the secret sauce is our culture. And if you ever come here, you'll see it and feel it. The second thing is, the reality is the efficiencies. Our technology makes our people just as efficient. So we have no drop on efficiencies. However, the reality is, and you guys work from home, maybe you feel like, let's be real. At 4:00, you finish a 4:00 meeting. It's like, man, I'm going to go get some chips and salsa, sit down there. Oh, the ESPN's on. We see there's a trade right now that, whatever, like you're not as focused when you're in the office. It's 4:00, you finish your work, you walk down the hall and you see someone else and they talk about something else and you come up with an idea and you get better. And so the synergies, the culture, the excitement, we're not changing that. That's part of the secret sauce. I hope everyone else goes to remote working because they're gonna have a hard time competing with us.
Yeah, you just mentioned how people don't quit. Well, another thing I want to touch on is you're giving your employees Cadillacs, Corvettes, and cruises, and just last month, $25 million in bonuses. I sure as hell wouldn't quit either, Matt. Can you kind of touch on some of those gifts, or is that just all a big thing of the culture?
Yeah, you take care of people that take care of you, and so this, this is not about Matt getting more money. Like the company's job, and so as a public company, my job is to take great care of the shareholders. And I made every one of my team members a shareholder. So now we're all going to get taken care of together in the right way. So that's why I said, no other SPAC has come out and said, I'm going to have a dividend, and I'm coming out with a dividend, 40 cents. And once again, maybe I'll do a special dividend on top of it. Maybe we'll look at modifying and adding a variable dividend, make it more like if we make money, we're going to share it with our team members. And now it's our shareholders and team members together. And so I'm not going to be the kind of guy that makes a bunch of money. Let's buy back the stock. No, let's share it with our partners, team members, and shareholders now. And so that's how we think about things. It's not all about, you only think about yourself, you're going to miss the boat. We take care of everyone around us. You take great care of people, they take great care of your clients, and then the business keeps coming. And that's what we're all about. And so I love giving away cool things. Our holiday parties, we didn't have one this past year. We had like well, you're talking about a more virtual holiday, but the year before that, I brought the Chainsmokers in. The year before that, we brought Ludacris in. Like we bring big parties. I brought Magic Johnson to speak to the company, Isaiah Thomas. Like we bring a lot of fun and it makes it a great place to work. And you know what happens? When it's a great place to work, people work harder because they care about the business. And when they work harder, we get more business and it just continues to funnel in a positive.
I want nothing more than to come to one of your holiday parties. Let me tell you.
Yeah. Dan, we might have to put in one of our resumes.
Yeah. I think we have good resumes. We'll join over one winter. We're short-term employees, we'll put out 2 weeks immediately.
First week of December and then say it just isn't working out and resign. I've had some people.
It's nothing against you. It's just the kind of guys we are. Hugh, do you have any more questions about the company before I go into my last two basketball questions?
Yeah. So Matt, listen, as an investor, I love, we talked about your competitive nature. We talked about, I really want, for just a quick story, there's a parking garage outside of my building. Okay. And the parking garage, my roommate just started his parking lease. Okay. He don't tell them, but they didn't take down his payment info. And for the short story, it was simply because the employee did not care. So I love that you're going back and you're putting in. So now, it's $300 a month. If I was an owner and I saw that mistake, which I'm sure it's not the only one, I wouldn't be happy. And so I love that you're putting, that money back into the employees and that, they have a stake inside the equity. But the question that I do have is that as investors, if I'm seeing on your balance sheet, Corvettes, and I'm seeing certain stuff like that, and then you go and raise capital that's going to make me question, what's really going on, because I don't know, we have a lot of companies that we follow where, we're seeing, the stock's trading at, $22 a share, and they do a raise that's massive for $17 a share. And then at the next, board meeting, we're seeing the CEO get a 52% bump in his salary. So I guess my question is that how much capital do you have to sustain at your certain level with your growth, and will you need to do a raise?
Yeah, so it's a great question. So a couple things. First off, once again, take care of your people, they take care of the business. And so if you think about it, obviously it gets headlines. Let's talk the $25 million of bonuses, or Corvettes and Cadillacs and cool stuff and cruises and all the cool stuff. But let's, if you want to be, you guys are financial investors, you guys get it. Like, we're talking what, 25 million plus all the things I just talked about. We're talking about $30 million. And then if you think about it, in the third quarter, I can't share the fourth quarter numbers yet, but the third quarter we made 1.45 billion in profit, right? And so very profitable. We have, we're gonna have over $1.4 billion of cash on balance sheet. And so the way I look at it is, you don't make money by holding all the money. You make money by spending money and investing. So I don't consider a $25 million bonuses or Corvettes or like all these things. Those aren't spending money. Those are investments in people, investments in the future, investment. And you'll see my income isn't going up. It's not about Matt. It's about our team. Take care of my team members. They take care of the business and our clients, and then the business takes care of itself. And so that's how you got to think about it. You as an investor, what you got to say is, hey, like any business, do you believe in the leader? Do you believe in the guy that's running it? Because, you could never know the details of our business at just at the level I would know, just because you wouldn't want to know, you wouldn't care. But you have to believe in the guy that runs it or the girl that runs it. If you believe in them, then you don't have to worry about those things. And so like, if you just want to, we get to the weeds of it, like at $25, $30 million, and we made a whole bunch of money, right? And it's like, that's what you do. You take care of people and you spread it out to your team members. They feel great. And then just think of it this way. If every person, if I get 100 people out of my 8,000 that stay on the team because of that, well, watch that return on investment, right? You can start doing the calculations. I can give you a whole bunch of models on it, but the right thing, at the end of the day, besides that there's a whole bunch of models and financial reasons, it's the right thing to do. You take care of people. When you have a great year, you take care of your shareholders, you take care of your team members. When you don't have as great a year, you don't take care of the people at the same level. That's the way it's going to always be.
All right. So we've got three more, and we have 15 minutes. So
good, let's do it.
Let's hit them. Okay. So you obviously love both basketball and your company. Are there ever days where you look back and wonder how your life would be different if you had taken the assistant coach job at Cleveland State instead of joining UWM?
Yeah, it would be a lot different. I do think about, looking at going into coaching. So when I played my whole life and I wasn't good enough to make the NBA, the next thing is you say, well, now I want to coach, because all I knew was basketball. And so I spent a year with Izzo, then got offered a Division I assistant job. I was the youngest, I think, Division I assistant at the time. However, I turned it down, and my between Izzo and my father, they said, "Why don't you go work at this?" And I told my father, "I'll go work at that little mortgage company." He didn't know much, just his little thing on the side. And if I don't like it after a year, I'm going back to basketball, because that's my path. And it took me about a couple months to realize that I didn't love basketball, dribbling the ball. What I loved was the competition, competing. And I found a way to channel that into the mortgage world. If I would have went to a business that maybe didn't report their numbers, maybe you couldn't see what our competitors were doing, it might not have been the same thing. But I don't ever think back about what I could have done differently. I love the choice I made. I love it. And the basketball stuff, I love basketball. I can watch games with you and spend time with you and go to games. But I love mortgage business, and I love people. And the basketball business is great. You only get 12, 15 people on your team. And mortgages, I have 8,000 people. I can make an impact on so many people and their kids and their families. I really love what I do.
I think that's one of the cool things about us in general, like between you and us, is both of what we do is competitive. In the stock market, we're competing against everyone else. Someone has to lose money for us to make money. And it sucks to think about it that way, but that's just the way it is.
But that's business. Like, there's always, in life, there's you win or you lose. Like it's a zero-sum game. If you play a game of football, one team wins, one team loses. If you're buying stocks, and that's why you guys are great. What you do, you guys are in the weeds. You guys know the stocks to look at. You guys aren't just. I've got people ask me questions about our stock and about things. You guys are actually asking intelligent questions that apply to the business. And then you got to make your own decision. Do I want to ride with them or do I not? And that's what people make the decision. And that's the buyers or sellers, right?
You're doing a good job of convincing us to keep you. Okay. Next one is you've hired 5 of your former teammates to work with you at UWM. You guys make quite the squad. Aside from just the benefits of having a history of people that you work with, are there any other benefits? And could you see any mortgage lender or even finance company fielding a team or a starting five that could be yours?
Yeah, so I got a bunch of my teammates. I have it's me plus 6 guys. I got Mateen Cleaves, who was the National Player of the Year or the MVP of the Final Four that year. I got Charlie Bell. Both those guys played in the NBA for years. Antonio Smith, Adam Wolf, Chris Hill, who was a dynamite shooter, also played in the NBA summer leagues, I think. And then me and another walk-on. So we didn't get it. But the rest of the guys did some pretty good
crowd
things.
favorites.
Yeah, I could put a really good team of the 5, and I can be the coach, and we'd be okay. But the benefits are, besides that, they're my guys and they take care of people. But that's not the way. Like, I'll get them in the door, but then they got to work their butts off. But they know the expectation. If you played for Izzo, you know what we're doing here. And Mateen Cleaves, who was the National Player of the Year and the superstar, he knows what it takes. So he's one of my leadership coaches. He's coaching my leaders about how we hold people accountable, how we drive people to get better, how we catch them doing it right, high-fiving people. It's part of the culture. And that's a big part of our thing of to be successful is helping those people because people that know us and Izzo comes down with his team and they walk through, like, we have that culture and that family. And the way I look at it is, if you don't want to be part of that team and that family and take care of each other, then you're not a great fit for UWM. And most people want to be part of a team, and my teammates help foster that throughout the company.
All right, last question. So you've clearly mentioned the competitiveness and how important it is to master your craft and be the best at it. We hit #1 stock market podcast, but we want #1 business podcast and one day overall #1 podcast. In your eyes, in your short time here, what could we do better in an interview setting to propel us to that?
Well, so I love it. So the way I think about it for you guys is, you guys did a great job. Think about it. I'm on this show, right? I'm proud. I was excited when you guys mentioned me in Twitter, and you got a great Twitter following. And at the same time, you guys have a lot of other people. And so what you got to do is you got to explain, and when you're going through it, how do you spread your wings, right? Part of it is you got to have substance, which you guys already have, and we know that. But beyond that is then you got to have a little bit of sizzle to get people to watch your podcast, follow you, go through that process. And so how do you do that? One thing is bring on good guests. Hopefully I'm not deteriorating that. Hopefully I'm helpful in some way. Right. But at the same time, what other things can you do to drive it? So the way I thought about it is, I always thought differently. At my business, everyone told us go this way, go build a retail channel, compete with like Quicken. And I went this way. I said, let's go dominate. Let's go be the best in this market. So create a niche and be the best. Don't try to be everything to everyone. So you want to be the #1 stock market podcast, the #1, financial, like, okay, don't try to be the #1 grocery store. Like let's dominate in our industry, right? And so too many people who, I talk to when I talk to schools and kids and different people, they try to be good at everything instead of great at one thing. And I'm a one-trick pony. I'm the best at mortgage is what I want to focus. I'm the best leader in the mortgage business, and that's what I want to be. And obviously, I got to get better and continue to improve. But I'm not trying to own 18 different businesses and do different things. I'm trying to be the best here. And for my shareholders, you guys and others, that's what they want. They want a guy that's here living, sleeping, breathing mortgage. And so I would say the same thing for you. Live, sleep, breathe what you guys do. You're on Twitter. You're following different people. You're tweeting at different people. You're in the world. You're connecting with people. And you keep doing those things. And you know what happens? It will have to take time. It took me 18 years, right? I tell a story. I don't want to digress. I tell a story. Yeah, I get up here. I'm in the office at 4 a.m. So, I'm here at 4 a.m. in the office, suit and tie. I stay till 6:37. I didn't come from money. Like, I joke about Dan Gilbert, who runs Rocket and Quicken Mortgage, Quicken Loans. And then Jamie Dimon, these guys are, first off, so if you want to, they're smarter than me. Second off, they had more money than me, right? But the thing is, they're not willing to outwork me. I get 24 hours a day, and so do they. And I've decided years ago that, hey, listen, if I work at 4 a.m. and they get there at 7, that's 3 hours a day, 15 hours a week, 60 hours a month, 720 hours a year. Are they 720 hours smarter than me? I don't think so. And actually, maybe they were. It took me 17 years. So maybe to do the math, it might be either like 8,000 hours, but I've been doing it all the time. And so I'd say the same thing to you. Who's willing to put the work in? Who's willing to do the things that you guys are doing? And the fact that I'm here and I know who you guys are and I follow you guys and look at what you guys are doing, I know there's other people doing the same thing. So keep up the great work. You guys are doing awesome. I'm a friend in the business. I'm not a stock guy, but I'm a mortgage guy. And hopefully if I could ever answer questions or help you in any way, you just reach out to me.
Well, you're about to have a lot of stock, that's for sure.
That's true as well. You're right.
All right. Well, I think you wanted to close us out real quick if you want to see what you guys say, and then we'll close this out.
Yeah, Matt, this was such a great time. I really enjoyed this interview. In fact, I think I'm going to increase my stake inside UWM coming up. Maybe tomorrow morning. My last question, do I need a college degree? Because neither Dan nor I have our college degrees. Do we need our college degree to apply at UWM?
Yeah, absolutely not. So I think maybe you saw what I said, or maybe you're asking, I don't know if you know, but I talk about all the time. I don't care if you graduated, from the best school in America, college. I don't care if you didn't graduate from high school at all. It doesn't matter to me. All I want is heart. I want work ethic and attitude and people that care. And, anyone can come in here. I'll hire someone and just like me, and you've got to work your way up. And that's how I think about everyone. And so we're all about great work ethic, great attitude, people that want to be part of something special. And that's what we're building here. And I'm glad that people outside of our four walls, such as you guys, are able to get a little peek inside and see what we're doing. But we're looking for great people all the time. You guys are probably too good. If you guys come here, you'll probably take my job one day. But then that's okay, because I'm 41, so I only got about 20 more years. But the way I think about it is work ethic and attitude. And I think that ties to your guys' business too. Anything you guys are doing, anyone's doing, it's all about, are you want to outwork everybody? Do you have a great attitude? Because it doesn't always go great. And that's what we look for here. College education doesn't matter to me at all.
All right. Well, thank you so much. This has been an absolute pleasure. And I'll definitely send you the link whenever we post it, man. Thank you. Thank you again for coming. We've had a blast.
Thank you, Matt. Really.
Thanks so much for having me, guys. It was fun. I enjoyed it.
All right. Take care and enjoy ringing the bell. That'll be a blast.
I'm excited.
All right. See ya. All right, guys. Thanks for listening to another episode of Pennies Going in Raw. We will see you again next Sunday, hopefully with another CEO interview. And we'll announce that whenever we get it recorded. Again, thank you for joining us. Make sure you leave a 5 stars on iTunes. Download it on all the platforms. Thank you, and see you next week.